Hi, dreamers. I thought I'd do an off-the-cuff one on Nvidia, which is a stock I hold none of, but has obviously been a hot topic of conversation everywhere. And so right now I'm inside my Seeking Alpha premium subscription, which there's a link down below in the description in case you want to get one too. And so you can see right here, the 10-year increase on Nvidia is over 20,000%. And so the question becomes, is this the one that got away, or is there still time to get in on the action? And if we pick a shorter time frame here, like year to date, you can see the over 80% increase just in the last 2 months. And so you may already know a lot about Nvidia, but just to cover the basics, what are they doing? Well, down here at the bottom, you can see the basic company profile, that Nvidia offers GeForce GPUs for gaming and PCs, in addition to the related infrastructure and solutions for gaming platforms. They also offer software for cloud-based visual and virtual computing, automotive platforms, and Omniverse software for building and operating metaverse and 3D internet applications. So essentially, they're offering the hardware and the software, including data center, end-to-end networking platforms. You can see their employees are almost 30,000, and they're based in California. And just to give you a layman's version of that, essentially, they're offering the component parts and tools for AI to make it easier for companies to network, manage, and plug into an environment for artificial intelligence. And you can see how the revenue has just exploded this year, and that the guidance for 2025 and 2026 is quite significant. Another thing you can see here is if you go to valuation, is that the PE ratio is over 77, which, as you know, in a typical stock, you're looking for anything between 20 and 30, with 77 being extremely high. You know, the issue is that it's really hard to value this company because it's really hard to value the size of the AI opportunity. And that's part of the issue in what's driving the price of this so quickly. And if you click on growth, you can see the revenue growth year over year and the EBITDA growth year over year. And these numbers are pretty shocking. In fact, in the most recent earnings report, they reported revenue up over 22% quarter over quarter and over 265% a year ago. And so the question becomes, are these rates of growth in revenue and EBITDA sustainable long term? And you have to realize that these numbers are like monopoly numbers. They're so incredibly large, it doesn't even really make sense. And so long term, the growth rates will start to slow simply because these growth rates are so incredibly high. And so again, the question is it time to jump in on Nvidia? And are we still at the beginning of an AI ramp? Or is this the one that got away? And so I wanted to point out to you a way to take a look at the balance sheet that might be interesting. So inside of Seeking Alpha, you can click on Financials and then go right into the balance sheet. And if you scroll down, I want to point out to you a couple of things. You can see here in January of 2023 that they had a total receivables of $3.8 billion. But in January of 2024, those receivables were almost $10 billion. But if you go down to this inventory line, which pretty much represents their GPU inventory, the actual chip that's a big driver in the business and growth right now, you can see the inventory for January 2023 was $5.2 billion, but the inventory for 2024 was only $5.3 billion. You see, demand is growing so quickly that they simply cannot meet the supply. And so what you're seeing here, and one of the major drivers of the share price, is that investors are seeing that Nvidia is taking on a significant amount of orders or accounts receivable, but have not yet fulfilled those orders because they can't keep up with the inventory. And so one question is, when does this dramatic growth start to slow down or maybe even come to an end? And one answer that I have is to closely monitor these two numbers. So one of the things I'm going to monitor is when the growth rate in the accounts receivable becomes normalized to the growth rate in inventory. So let's say accounts receivable grew by 20% and the inventory grew by 20%. That's when you'll start to notice that the market will have caught up with the Nvidia value. And if you start to see that inventory starts to grow larger than receivables, that would be another indication that they've overestimated demand and are starting to build up inventory. So that's just something for us all to keep our eye on as we see this meteoric rise in Nvidia stock price, which is a function of valuation. So now that you know what I'm looking at in the balance sheet, here's another macro element that I'm looking at as well. When thinking about, is it still okay to jump in on Nvidia? And what are some of the other things to be aware of in terms of challenges or threats? So in this recent Motley Fool article, one of the things that's discussed is that their biggest customers include Microsoft, Amazon, Meta, and Alphabet, which essentially is Google. And of course, we just talked about the fact that Nvidia is having trouble keeping up with the demand. And this is something that their customers are well aware of and also concerned about. And so, for example, Alphabet has deployed custom AI accelerators, known as TPUs, in order to, in their words, scale cost efficiently for a wide range of AI workloads. And similarly, Meta is expected to deploy a new custom AI chip this year in a bid to reduce its dependence on Nvidia. Microsoft also has built custom AI chips for deployment in its Azure data centers, and that's supposed to hit the market this year. And Amazon has revealed it's making its own chips so that they can be used by Amazon Web Services or AWS cloud customers. And so what does all that mean? That it's not surprising that these tech giants are looking to do two things: cut down their massive spending on these custom chips, but also reduce their reliance on Nvidia in order to cash in themselves on the AI tech boom. So there's a little bit of customer threat going on there, in addition to other chip manufacturing competition from, for example, Avgo and Marvell Tech, which are two leading manufacturers of ASICs, which an ASIC is an application-specific integrated circuit. And in this article, it goes on to say that Marvell could generate $1 billion in revenue selling custom AI chips in this fiscal year, whereas Broadcom, or Avgo, is expected to sell custom AI chips worth $8 to $9 billion in 2024. And so the reason why I wanted to record this real-time midday Friday on 3/8/2024 is the irony is that today's a day where Nvidia is actually down a little bit. And to answer my question at the beginning of this video, I do think that Nvidia still has room to run, but that we might see a shorter-term cooling off period, which could be a nice time to jump in if you're willing to hold for the long term on Nvidia. Because guys, this is going to be a very contentious race with a lot of companies putting everything they have against cashing in on the AI boom over the next decade. And so two other things I wanted to point out to you is inside of Seeking Alpha, you can see this section over here, which shows you all kinds of companies that you could look into and monitor in the same way that I'm monitoring Nvidia to see other opportunities that perhaps haven't caught fire yet. So for example, if you click on this ranked in the industry, you can see other top semiconductor stocks, including their major supplier, TSM or Taiwan Semiconductor, and then a variety of other ones that are also in the race or creating component parts or environments in order to fuel the AI boom, and how Seeking Alpha analysts think about it, and Wall Street ratings. And so this is a nice area to take a look at other companies that have skin in the game. And another thing I wanted to point out to you is also just to be thinking about if you're a little bit risk averse. Instead of putting all of your chips on one of these horses, you might want to consider a more broad-based ETF that is simply focused on the semiconductor industry. And so, for example, you know that I've been doing options on SOXL, which if you look at their top holdings include Nvidia, AMD, Avgo, Qualcomm, Intel, Applied Materials, Lam Research, and Marvell. And their top 44 holdings can be seen right here. going down into ASML, Texas Instruments, etc. And just as an example, if you had watched my AI stock video 8 months ago, in June of 2023, you would have bought SOXL at about $24 and would have already doubled your money. So I hope that was helpful as you think about Nvidia, your decisions on whether or not you want to jump in and put some skin in the game against that particular company, or if you want to start monitoring a basket of AI or semiconductor stocks to try to capitalize on this AI boom. For me personally, I'm going to be looking for dips like today and a little bit of a cooling off period before the next run. Well, that's it for today. I hope you enjoyed this dividend income update. And if you want a richer, real-time experience with me, you can always follow me on Instagram or X. And if you're doing your own research using Seeking Alpha, feel free to find the link below to subscribe if you want, no pressure. As always, I encourage you to do your own research, then implement and learn by putting it into practice. And as a reminder, I'm not a financial advisor, so keep in mind these videos are for entertainment and inspiration only. I'll see you on the flip side.